Hey guys, just wanted to record a quick video and for myself to keep a record of, the big plays that I take, the ones that I can really plan ahead in advance. Now, I was watching QBTS, I've been watching it for the past week or two and have kind of like built a plan around it, but haven't really written it up. And I feel like that's something I've lacked in the past, and it's also why I don't have conviction on my discretionary plays, which is also the reason why I haven't been able to size huge on my discretionary plays. So, with this play exactly, I feel like we're right around that pivotal point where the play is just going to start getting insane, which, as we know, can happen very quickly, unexpectedly, within, 2 or 3 days, or even one day. Tomorrow maybe we gap up and go insane. But, anyways, I want to plan ahead and I also want to have a risk goal. I want to hit a certain risk level that I haven't in the past on discretionary plays. And, the data shows that I'm very good at these setups. And most of the setups that I plan out, I'm very good at. But I lack the conviction in the moment. And so I can't really size. So, getting into it, I have this huge drawn up plan just to make sure that I get my size in and that I'm not second guessing myself anywhere. And that, you know, I have my plan, I'm going to stick to it. If it plays out, it'll work out huge. If it doesn't, I'll take a little loss. Won't be detrimental or anything, but it will be significant enough for me to pay attention to these plays more and more, to study them in the past and pay attention to them in the future, and hopefully capitalize on them in the future. So, getting right into it, I have a risk structure here, and this is where I break down, how much I plan to risk, and also what stages of the move and how much I plan to risk on those stages. So you can read through that. Um, it's mostly talking about numbers and how I'm going to deploy that risk with options and equities. If a lot of if then scenarios. So then you get into the execution plan. So this is where, I really took a deep dive and planned out all the different if then scenarios and how I would approach them. The main scenario that I have on QBTS and the quantum sector as a whole is that, there's two scenarios that could play out. We could get a quick reversal off this short-term downtrend, and tomorrow, Monday, we could start running straight into the upper range. Tuesday we could have that push, or maybe it happens later in the week, but either way, that's the quick scenario. And then we have the long dated scenario where it takes maybe 2 or 3 weeks to end up playing out, and I have a plan for that as well. So as you know, there's a lot of different quantum stocks you can see here. QBTS being the head of the snake, I would say, because it's over all-time highs. It's the most talked about ticker. IONQ is the runner-up there, but then we have a lot of the smaller ones, runner-ups. RGTI. These ones are still far away from their all-time highs, but I think if QBTS continues on its run in a parabolic way, that these will at least hit pretty high range in their backside moves, or they'll break out to new highs. That's what I'm hoping for. Um, so here on the front side, I'm planning my execution. Right now, we're in front side right now. So right now I want to buy some calls on the pullback. So Monday I'm looking into RGTI. I feel like this is the best one out of the other smaller cap ones because we've pulled back the hardest and we've also gotten the furthest away gap fill on the daily. Also, the options are pretty good. It's got a pretty good book. The runner-up was ARQQ. This one, it has even less attention, but the gap fill is right here, so it's a lot closer. So that's going to be a major reversal point potentially. QUBT, also very beaten down. Also, the gap fill is close by compared to RGTI. So I plan to buy calls on RGTI, 1750 strike, probably 2 or 3 weeks out. These can take longer than we expect, and with options, I feel like the cost to a longer dated option is worth it because I won't be as in a rush to fight time decay. So even if it works right away, I won't be rushed to sell it by Friday. I'm also going to do equities probably on QBTS just because this one is going to be less likely to have weak flush outs. So I expect all the other ones to have somewhat relative weakness. And so the flush outs, like a small pullback on QBTS, could be a huge flush out on the small caps. So trading equities with tight risk, I want to be careful of that. So that's the first stage, front side, and you can go down here. I have the planning. There's also an OTC that I'd watch, see if it can have tight structure. We also have QMCO. This one has not even started its run, so that's why it interests me. Also, the gap fills far away. So we're still at lows here. But as you can see, it is reacting positively to Quantum, and Quantum is literally in the name. So I really like this one. Market cap is 77 million. So I think this is the one that has the highest percentage return potential. So I'll be watching this one for equities as well. But you can see here, this is my QBTS plan. Monday, Tuesday, get a push up into the upper Bollinger Band, pull back, not breaking any lows. Although I have seen in the past that we can sometimes clear out these lows. But I'll be looking to enter long, very tight risk. Might take a couple cuts, but then we continue. And you can go down here, you can see prior examples. NIO, obviously all these prior examples are previous sectors that were similarly hot compared to Quantum. So NIO, obviously the EV sector. This one was a long dated scenario. So this one's not the instant recovery. With this one, we are right here. All right, so you can see we chopped around for a while. But eventually we broke these backside resistance to the upside and then had a higher low. So that's what I'll look to position around in this scenario. Now there's all the other ones look similar to QBTS. The long dated scenario I would say is somewhat rare. So XPEV, obviously this looks pretty similar. Although the pullback is less, like we haven't even on XPEV, we haven't even broke down from the main reversal day, but somewhat similar structure. Tap the lower Bollinger Band and then we go on a run immediately with the gap up and fail. Canoe, similar thing. This time we actually did break down. This one just had a clear out, so it was more of a weak play, but still worked out. NRDE, this is the ride ticker. They changed tickers, but you can see here Bollinger Band tap just like QBTS. See, just like QBTS. And higher low here, although we did have a little clear out. So actually not a higher low, it actually cleared out. But instant recovery, grind higher, boom, we went on the run. So I'll position with equities and options, pretty much equal risk. But yeah, you can pause the video and stop at these examples. This MVIS, another long dated scenario. Now we get into the rotation top out. With the rotation top out, I want to be very careful shorting equities because it can be very choppy. And I learned that after I went through prior examples. But the puts I will be buying, and I'll be looking to cover those into a flush out panic. So despite the likelihood for chop and potential backside clearouts, I think we'll at least get a nice exhaustion gap up to buy puts into and then sell on a flush. That flush will be within 3 days probably. So I want to be out within 3 days to protect myself from the scenario where we get backside clearouts. I have some notes here. Like I said, look to cover within 3 days. Clearouts increase probability of top out. So I will be shorting around clearouts if those do happen. And backside structure is something you want to look for. So here we kind of just trended down, went back up, trended down, went back up, trended down, but then we had this backside bounce and then broke down into the structure. So for example, here on this recovery bounce, there was no breakdown of structure. We kind of just trended. This, I guess, could have been a potential breakdown, but we cleared out, so that kind of reset the move. But again, you can pause at these different examples of the top rotation, but you'll see that there are a lot of clearouts and it's a little choppy, even on these runners, which were very clean, very big runners in a hot sector. Some of them worked right away. This one, see here, we got the exhaustion gap up, first red day, but we grinded up, cleared out, and failed that backside structure. And then we had backside bounces. GOEV, we had a first red day. There was no like major gap up, but we had a first red day here. We held for days after, clear out, then we failed. Here we had a very clean exhaustion gap up on LI, but again, we panicked and we just didn't look back. There was no continuation to the downside or breakdown of the structure, and we had another exhaustion gap, which that one worked out clean. This one was clean, pre-market fail, so it was a little hard to execute probably, but that one worked. All right. And like I said, for each of these cycles, I have, a risk plan. Here's the front side risk plan, rotation top out plan, and the backside plan. Now, my goal is to really use the cushion game here to amplify returns. So I'll be starting out, with 10K risk on the long side. Now, if the long doesn't work out, the short setup won't even be there. Maybe there'll be some backside shorts later on in the months. But, if the long doesn't work out, there's no play at all. So max risk in this scenario is 10K. But if it does work, I don't see how I don't make money on the long side. It's pretty straightforward on these moves. So with the long cushion that I'll get, I want to put that into buying puts and shorting the stock on the top out day. Obviously, top out day, like we said, is tough, but I think with simple execution, waiting for clear confirmation, not going for anything insane risk reward wise, just going for a good win rate win, I think, I'll do good. And I won't risk all the cushion. I'll risk probably 20% to 40% because I think the long has the potential to be the most reward of this entire run, depending on, how it plays out. But anyways, going into the backside, this is where I plan on getting most of the short profits. Now, at this point, if we've gone backside, ideally I have good cushion. Ideally I have a lot of cushion. Sorry for the background noise. But ideally I have good cushion. I don't want to risk all the cushion, but I do want to use it to amplify returns. Now, execution plan backside, there's going to be several different backside opportunities. Usually there's at least one and then sometimes two or even three backside bounces to short into. Now, I actually want to look to long into the backside, and I'll have chart examples of that. But, it's fairly clear to long into the backside. You just want to wait for a major daily breakdown, and a lot of the time I see the lower Bollinger being a good long opportunity. So right here you can see last time QBTS ran, boom, bounced huge. Here again, boom, bounced huge. So yeah, but mostly I won't put a lot of risk on that. I'll put most of the risk on the short. After going through the charts, I realized that like frontside and like the top out, it's very choppy, but this time you have higher probability and you have more structure to work with. So my plan is to use somewhat of a wide stop. When we push into the upper Bollinger Bands on the backside, I'm going to risk, previous levels based on the frontside run, but I'm not going to risk over highs or anything crazy. But I'm also not going to risk the high day of that backside run because clearouts are very likely. As you can see as I'm going through these, we had a backside gap up, and then, kind of sideways backside structure, clear out, and then we flushed. This one, we had a intraday run, no choppiness there. So this is why I want to have a wider stop. I want to get involved on the front side or on the initial run up where I think it's a good short, but I don't want to get cleared out multiple times. And the backside is forgiving. It has, usually a good range. Something else I noticed is that some plays, they bounce backside very quickly in like 1 to 3 days. Others like NIO, this took weeks to develop. So on the weekly ones, on the ones that take a lot of days to play out on their moves, I want to be very patient and I want to wait for more backside because the range on these is a lot better. So I don't need to short frontside. I may get some starters, but probably mostly backside. And you could see there's a lot of micro backside bounces, which just, backside bounces of the backside bounce. So those I'll be pushing into. Now, I don't think I will buy any puts on the backside just because these plays take forever to play out on the backside. So, playing with the expiries very hard, time decay very hard. I may buy some calls to catch the backside bounce, but that's about it for options once we rotate from the top. You can see here, clear gap up, but then that wasn't the top out day. We had 1 and 2 clear outs, but we had nice backside structure, and I want to be very careful shorting deep into the backside on these backside bounces because although it is forgiving in terms of the range, still the risk reward is very tough. I'm not going to make 1 R on these. I want to make at least 2 R. So I want to get most of my size at the highs with, maybe in this scenario, a risk at this level above these levels over here, shorting into that upper Bollinger Band on the daily. These are the 2-hour charts, but on the daily, they're also hitting the upper bands. But yeah, you can pause if you want to look at one of these. And then down here, I have previous sector runs. QVTS is very interesting because, this did have so many waves. We had the major move up. This was the main one. And then backside clear out. And then now we're going on a run again. This has happened in the backside or in the past. But it's, more rare. I feel like it's also weird that these, they had their major run already. So this is like round 2. Can round 2 be bigger than round 1? I don't know. Especially for these. Can these backside ones break their highs again? I think maybe. But either way, if QVTS does work out, RGTI is at least going to fill this gap, I think. And the others, they'll fill their gaps, I think. But yeah, I mean, the whole point of all this planning is just to get myself to go bigger on rare plays. Because sure, you can build systems around them, but in terms of scaling them, it's much different than a setup that you have high frequency on. You kind of have to have conviction on these and use discretion and go big. Worst case, I don't see anything terrible happening. Maybe, a decent pullback overall, but it's well worth it because this is an investment in my future. Because imagine if this works, how much more I'll go on future plays and how much more confidence I'll have. And if it doesn't work, I'll know what to look for. I'll know where I go wrong on these plays. I'll know how to fix that. And the next sector play, I'll plan just like this and hopefully capitalize on it better. Now, meanwhile, we do have nuclear stocks going. Now, these companies, nuclear stocks, they have no revenue. This company, OKLO, is 7 billion market cap with zero revenue. Zero. It's quite insane. So, sorry about the background noise, but these could be a watch as well. I like Quantum a little more because they're a little less market cap and um they seem a less grindy. These are much higher prices, but a similar opportunity. And to be honest, I'm not sure how to approach it where, a lot of the time there are two or three sectors running at the same time. How do you pick? How do you pick which sector? Obviously, if quantum ends up dying off randomly and nuclear goes, then I'll kind of switch the plan over to focus on nuclear. I won't have that long cushion, but I will have, the rest of the plan. And I'm hoping all my money will be made on the backside anyways. So if I can catch a little bit of a rotation on top out on these nuclear stocks, then at least I'll have some cushion to play with on the backside. And I'm sure these will play out similarly. You can see OKLO, it was, fading before the sector heated up. SMR, same thing. It's fading. So we know where all these stocks are heading. My main focus is backside, but I think if I can catch front side with minimal risk, putting up 10K risk with options, I can make 50, maybe even 100K depending on the timing. I think it's well worth the risk. And then the backside is more of a high win rate play. We know it's going to happen. Let me know what you guys think. Let me know what your guys' plan is, or if you're even planning on trading it at all. Peace out.